You're watching CoinDesk. This next interview is one of the highlights from Consensus 2025.
To say good morning, but it's good afternoon, so good afternoon. My name is Eleanor Terrett. I am the co-host of the Crypto in America podcast, and I'm joined today by two investing legends in the digital asset space, both with a background in macro. So we're going to start there. We're going to take a look at the macro view. I do kind of want to get into how you guys started, because I know, Dan, you launched the first crypto fund back in 2013, right? What made you take the leap? Did people call you crazy? What was the sort of the reaction at the time?
Yeah, so Dan and I actually both were at Tiger Management looking for asymmetric trades. Trades that have 3 or 4 times the upside compared to the downside. And in 2011, my brother introduced me to Bitcoin, and I read about it, thought it'd be a cool idea, but it didn't really do anything. And then in 2013, Pete Berger of Fortress said, hey, let's work on this together. And I went in for a coffee, and I didn't leave for like 8 years from their office. And just realized it's the biggest trade of a generation. And so it's already done 10x 3 times. I think you can do 10x again. And so if you have a trade like that just, it's so asymmetric, there's so much upside relative to the downside, everyone should have some of it in their portfolio. Definitely everyone thought I was crazy back then, but still a lot of institutions have no exposure. So there's still a lot of people that are skeptical, haven't really made a commitment. And so that's why I still think it's an amazing investment. I think there's a couple more decades to go of outsized returns.
Amazing. Dan, what about you? Did they call you crazy when you got into crypto?
Yeah, a little bit. Maybe not as crazy as they called Dan. I didn't launch a fund as early as he did. We, as you mentioned, we're from the same macro analytical background. Macro framework that we use is pretty similar.
Right, at Tiger Management, for those
yeah,
who don't know.
exactly, Tiger and other hedge funds. And my entry was actually a little different. In 2012-13, I have a physical gold sales and storage business called GBI. And that company integrated with a firm called BitReserve, which today is the Uphold wallet. And so we spent a year integrating with that platform. We became the first place you could buy or sell gold to buy or sell Bitcoin or Ripple. So that was my introduction to it. I remember buying Ripple at 1/10 of 1 penny and like driving it up on the markets. It was from like $50,000 would take it up, from 1/10 to 2/10. But I didn't really get more serious about it until the bear market that hit in 2018. And I was attracted, generally by the collapse in price was something I'd seen a lot after bubbles. When you're trading in the traditional markets, very often you'll have a bubble and then something will drop 80, 90%. And at that time, it's usually either going to zero or it's a buying opportunity. And so I finally said, okay, there's something going on here. It's real. I've been exposed to it, but I've never really done the work. And so that's when I started really digging in. And then I had the same epiphany Dan did, that this is the biggest macro trade, certainly investment, structural change of all time, I think. And it just simply, it's the digitization of money and value. And we saw what, the advent of the internet was the digitization of information and ideas. So it was I wouldn't say once the light bulb went on, it was easy to get it, but it took quite a lot of work for the light bulb to go on.
What drew you to mid to late stage company investments?
I'm sorry?
Sorry, what drew you to mid to late stage company investments?
Well, I didn't want to compete with this guy doing venture. That was actually a big part of it. No. Also, venture to me is extremely difficult, and especially when you add a liquid component. I felt like I would need a staff of 20 people around the clock, or 25, just to monitor the trading, to have cryptographers and blockchain developers on staff, parsing the code, trying to figure out which blockchain was going to be best for which use case. I just thought there's just no way I can compete with Andreessen and Polychain and Pantera and all these other guys. And that was never my style of investment. I was always a sort of big picture macro investor placing bets on sectors. I like gold in the early 2000s, farmland and agriculture in the mid 2000s. So it never actually occurred to me to even try. And also I hate the concept of having any zeros at all. And venture guys, they'll make 10 investments, I always say 9 are zeros, and then 1 is Google, and they've made a 100x return. And that style just never suited my personality. I was okay to make less on the upside, but then not to have all the pain constantly on the downside during the bear phases.
Right.
So,
Dan, you're a little bit more in the weeds, should we say? A little bit more like early stage. You also invest in tokens. What kind of drew you to that strategy, and how are you balancing? I believe you have 3 now. It's hedge fund, right? Venture and private equity.
Yeah. So we started there just because that's all that was. All these big companies like Coinbase now used to be 1 or 2 people when we started investing. So everything was seed and Series A investing, and also in tokens. And to Dan's point about normal venture, this is the best advertisement for blockchain being an amazing investment in your portfolio. In normal venture, 90% of companies go to 0, and you make, a couple times, 1.7, 2 times your money on one company working. We've been doing this for 12 years, and we've made money on 86% of the companies we've invested in.
Wow.
It's just crazy. And part of it is we have a good team, we do the work, but frankly, part of it's just a rising tsunami is floating all boats. And so we're just in the best space to invest in. And the other cool stat for why blockchain should be in a portfolio, we've invested in 22 projects that become unicorns. Right? That's just off the charts in a normal world. And again, I think some of it is we do some good work, but it's just a great space. And given that most people still don't have real exposure to the space, it seems like there's a long way for that to keep running. And I would say that to your question of tokens versus private equity versus special opportunities, liquid tokens, I think the best is to get a chunk of all 4 of those types of asset classes. Because each one has their pros and cons, and then they go in these wild pendulum swings where sometimes tokens are really expensive and venture's cheap, sometimes it's the opposite. And so as an investor, I always advocate people, investing in a wide spectrum of both tokens and venture. And this is actually the first time you can invest in protocols, right? If you were prescient enough in the early 90s to think the internet was going to be big, you couldn't buy a chunk of the internet, right? There was no shares of SMTP or whatever. Here, there's 21 million shares of Bitcoin, right? Like if you think Bitcoin's going to be important, you can buy a chunk of it. And so that's why I think it's important for investors to hold both tokens and venture equity.
Nice. You're both
Can I
back.
just say one thing about that?
Please, yes.
Just that you can see why I didn't want to move into venture when you're sitting next to a guy who 86% of the investments were successful. Like, who wants to compete against that? So.
Well, let's talk about your successes.
I'm sorry?
I said, let's talk about your successes. eToro is going public. You were
well, that's today.
Early
yes,
in eToro.
Today. Yes, we have it's our first IPO. Very exciting. We invested in 21. Originally it was SPAC'd at a $10 billion valuation, and we purchased it at a $2 billion valuation. So today, I think it's bumping up against, I think 5. It's up 35% today, 10 times oversubscribed.
Yep.
And that's coming on the heels, actually, of last week. Another win for us, Deribit, was purchased by Coinbase. So you don't get lucky that often. I mean, back to back in 2 weeks. But I do agree with Dan's, especially going forward, thought that, it's good to have a little exposure in both. I mean, we've been primarily focused on growth stage equity, so B, C, and later rounds, and looking for companies. Valuation is very important to us, sort of 5 to 10 times revenue. I tend not to invest in companies generally with less than a sort of $400 or $500 million valuation, looking for 40 to 50 million in revenue, at least, so that it's more of a business, so it's de-risked a little bit. But in our fifth fund now that we have our focus, we have a little bucket for what I call growth stage protocols. So it's just a little bucket of 4 or 5 different protocols that are actually producing a lot of revenue. It's just that the revenue doesn't accrue to the equity. There is no equity. It accrues to the token. And that's just something, even 2-3 years ago, I don't think you could have there weren't that many or any at all. So we have a little bucket, but we're not going to trade it, and it'll just be a nice exposure.
Just following up there, when you look at these companies, these crypto companies, and you're coming at it from the macro lens, like what do you use from that experience to figure out whether these investments are worth it or not? What are some signals that are important to you?
Well, valuation is very important. I mean, the thing that kept us away, we passed on FTX 3 times, we passed on Celsius, we passed on BlockFi, we passed on over 200 businesses in the last 3-4 years. In this space, for some reason, founders and CEOs think that they should be raising capital at 50 to 80 times revenue. And so that makes it very hard for us and to make a return for our LPs. And so a lot of those deals we just passed almost automatically. Even businesses that we really like, we won't invest in if the price isn't sort of reasonable in the beginning. We also like to take board seats. We have 11 board seats out of our 23 companies, so we're much more active with the companies themselves. And this space needs a little help in that area. They're not necessarily all ready yet to be public. But the macro, which means really top down, is sort of is the way we think about how we diversify the portfolio. So we want to have, let's say there are 10 subsectors within what I call the broad digital asset ecosystem. You could have RWAs or DeFi or NFTs or borrow lend or whatever the broad areas are, or infrastructure, consumer. We want to have a portfolio that's exposed to as many of those, I would call them subsectors, in the overall space. And so that's a very macro way of thinking about an asset class. And then we do a lot of bottom-up work and essentially, unfortunately, say no to almost everything. So I would just, last thing I'd say is rigor. That's what you learn when you're in the old world. I mean, Dan and I have both suffered many defeats, but we're still up here and going at it and having fun. But it's really through those defeats that your process is honed.
Let's talk about regulation, because that's something that I cover quite frequently and something I'm super interested in. How has the changing regulatory landscape affected your businesses? I mean, let's talk about 4 years ago where there was hardly any investment in crypto. Pretty much there was the IPO market was dead, right? Nobody wanted to talk about crypto because for fear of getting sued. In the last 6 months, what have you seen change the most, Dan?
So it's a huge issue, and the way I think about it is the United States very aggressively promoted the other protocols that we now call the internet, right? The US literally built ARPANET, and then Congress gave all kinds of safe harbors to internet companies. They even gave Amazon an 8.25% discount versus Barnes & Noble by not forcing them to collect sales taxes. And so it's no surprise that all of the major internet companies in the free world are based in the United States. The stance of the US to blockchain literally is the polar opposite. Until just recently, most of the US government politicians super aggressively negative against blockchain. And so that scared entrepreneurs out of the US. There are huge amounts of protocols that will take customers from any one of 220 countries on earth except for the United States, right? And so we've ended up with almost 90% of crypto trading happening outside of the United States. 90% of the value of all the protocols is outside of the United States. I'm an American. I think that's bad. I think the government should be at least neutral. Right. And so the election was a massive swing from extremely aggressively negative, which really never made any sense, to now very positive. And so it's a huge unlock. And I would say that we're kind of coming back to what it always should have been. The last 6 or 8 years were kind of the weird anomaly. I would mention the CFTC and the IRS, and some of the agencies in the US were great, but politicians and other agencies really hampered the growth. And so we've ended up investing in 20 companies in Singapore, right? Because Singapore has great regulation, entrepreneurs move there, they set up good businesses. it's great to see, hopefully we'll see the flow come back to the U.S.
What about you, Dan? You seeing what's going on with institutional allocation? Do they feel better now that the regulatory maybe headwinds are now tailwinds, or is it still a work in progress?
Yeah, I mean, they feel better, but I think that maybe has to do a little bit with the ETF. The Larry Fink change in the summer of 23, I think got some of the big institutions thinking about it, and then the launch of the ETFs in January 24, and then the most successful ETF of all time. And I have investors, foreign investors who say to me, well, the government, now that there's an ETF, means that the government approves of Bitcoin. I'm like, well, it doesn't exactly work that way, but I think that opened a lot of people's minds, the ETF. In terms of regulation, I mean, look, I had multiple companies that were being sued 9 months ago, and now they're being encouraged to go public. So, I mean, it's the biggest 180 degree that I've ever seen, from Washington, literally on anything. So it's a great environment, and the narrative that we're really focused on is, look, Trump has said, and he's very clear about this, he wants the US to become the crypto blockchain hub of the world. And so I think having a regulatory framework is great, but to me that's a little bit sort of like a build it and they will come. The way, in my mind, is you encourage companies, not just American ones, foreign, to list on NASDAQ and NYSE. And if we can have 40, 50 blockchain crypto businesses that are, a little more established, not, larger, real businesses, I think de facto we then become the hub. So that all that 99% of capital that's not in the space, and maybe it's even in larger, they have comfort that they're owning a business, that it has a balance sheet, income statement, there's a CEO, there's some comfort there. I've always thought there would be a transition, value moving on chain, I don't think happens overnight. I think it's, and I don't think equity completely goes away, but there is a world, maybe 10 years from now where all value does accrue on chain, does accrue to a token, and is all on chain. I think that's the bigger vision, but just it can't get there overnight. And having companies go public here will make it easier for institutional investors to really allocate, like you're seeing with eToro today, and like I think you're seeing now with Coinbase, which was just put into the S&P. I mean, it's a huge success for them.
Is it all about making institutional investors feel more comfortable that these companies are established enough to be in a major indice or go public on the NYSE or the NASDAQ?
Yeah, it's hard to be public in the US, right? But even if you're going to be SPAC'd or IPO, and that stamp of approval is something that I think non-crypto investors are looking for, because, I mean, the space does shoot itself in the foot every 2 to 3 years. There's always, unfortunately, some mishap or something like that. And so, you'll have a lot of outside the space investors say, I will only allow Coinbase to custody my assets because they're a public company and they have certain standards that I'm comfortable with. So I'm not saying it's absolutely the right way, but I think that's the way things are going to play out. And I think we have a few more companies this year and next year that will be listing. So,
anything you want to share?
Well, I mean, there are things that are out there already. I mean, I think first half next year, Kraken, potentially. This year, Circle, Figure.
Right.
And there are more. There are more.
You think IPO is an unlock, Dan?
Yeah, I think that, like Dan said, there's a huge pent-up demand for institutions, pension funds, mutual funds to invest in blockchain, but there have been very few that the SEC is allowed to go public. And so now that we're going to have companies like Circle and Figure go public, all the pent-up demand will be able to go into these companies, and I think they will all perform very well. And I think from a macro standpoint, it's really important to kind of zoom out. The traditional markets like stocks and bonds, they look pretty dicey, right? Like the stocks are at record highs, bonds are well below, where they could be with inflation and everything. So if you are an institution, you're looking for what can you invest in And especially with the very uncertain political climate with tariffs and all these really wild things that are very hard to predict, that looks dicey, and that's impacting the value of the US, the US dollar, all that. And a theme we've been on for a long time is the separation of money and state. And that's what Bitcoin is and other blockchains, is it's taking money away from states and making it be independent and not something that politicians can mess with. And so that's why I think the next 4 or 5 years are going to be great for blockchain, because the traditional markets really do have a lot of risk in them right now. And
now with what are the headwinds you're watching there in terms of trade, in terms of economic uncertainty? Is there anything that you're like, oh, that could potentially affect that thesis?
Well, yeah, the whole thing with tariffs is so unpredictable, and it's so hard for any investor to be able to cogently invest around that. And I think it's value destroying ultimately, because it's increasing uncertainty, which makes people have to put a bigger risk premium on whatever asset they're in. And it's not a surprise that over the last 12 months, the only thing up is crypto, right? Bitcoin's up 50-something%, all crypto generally is up about 40%. And most things like, stocks, bonds, real estate are essentially flat. And that is the paradigm I see for the next 3 or 4 years.
Okay, I'll give you the last word, Dan. Dan?
I mean, I think that was perfect. I don't need to say anything after that. He tied it all together, and I wouldn't have said anything differently on the macro. So
awesome.
good.
Well, thank you so much, guys.
Yeah.